Market correction. What is it? How not to react to market correction? How to respond properly to market correction? Let us see. Hi, this is Ramalingam from holisticinvestment.in. We help individual investors like you to take right financial and investment decisions. First, let me give you a proper perspective on market correction. Market correction does not destroy your long-term wealth. Your reaction to the market correction has got the potential to destroy long-term wealth. So it is not market correction that is dangerous. How you react to market correction is dangerous. So in this video, let us see what is market correction and what's the difference between market correction and a bear market. What is the characteristics of a bear market and the relationship between correction and bear market. What should you do when there is a market correction or a bear market? We will see that. What is a market correction? Market correction is a decline of 10 to 20% of a stock market index from its most recent peak. So the market is at a particular level. If market is coming down by more than 10%, then that can be termed as market correction. Market correction should not be a one-day event. Market correction should be there for a period, maybe a week, 10 days kind of time frame. Then it can be considered as a market correction. There are many factors that can trigger a correction, right? It can be the market position. Say market is already overheated, overpriced. So it needs to come back to a fair valuation. So market can correct. There can be macroeconomic news like inflation going up or interest rate going up. There is a political uncertainty, war-like situation. These kind of macro events can trigger market correction. Some unfavorable situation to the businesses, right? If there is a perception that like there's more tax, the budget is not like business friendly, then in those kind of situation, again there is a possibility for correction. What I have told you is a couple of reasons. This is not an exhaustive list. There can be numerous reasons for market correction. Market correction will be there for a sustained period of time, but a brief period of time. If it is for a longer time frame, then it will be considered as a bear market. Right. One thing which we have to understand very clearly about market correction is an indication of a potential reset. Means market has gone up extremely overvalued, right? Or some business situation, business valuation is not factored in the pricing. Now all those things are getting factored in, and because of that, the index level is getting corrected, right? So it is a potential reset. It is not the end of the story. In fact, corrections help investors to identify good stocks which has got inherent strength and stability. If there is no correction, if there is a continuous bull run for 2 years, there's a high probability people will chase like a fake trend and they may substantially lose their money. If there is a correction periodically, then there is a good probability that people will be able to like differentiate between potentially less inherent strengthier stocks and potentially good inherent strengthier stocks. So that way, stocks which has got real inherent strength are stocks which is not having inherent strength, but somehow because of the trend, because of the continued sustained bull market, some stocks may go up, some stocks may get overvalued. So fundamentally good stocks should go up. For that, correction is a good period to identify which are all really good stocks, which are all simply following the trend and going up. So market correction is an indication of a potential reset, not necessary to become panic, because after the reset, there is going to be a recovery. What is a bear market? A bear market is a situation where market falls down more than 20%. Market declines by more than 20%, and it is like associated with a sluggish economy. Market bubble getting burst in the year 2000, technology bubble burst. Because of that, market corrected by 50%. And war-like situation, political unrest, these kind of things can trigger a bear market. Generally, bear market, there is a group behavior, herd behavior of fear, extreme panic. People rush to protect their downside losses. Market has come down by 30%. Okay, let me encash and sit on cash. That will be the kind of mindset people will be having. Why people have such a negative mindset? During market crash, there is huge panic, and because of media, this panic is also heightened. There will be a lot of negative news, right? Even during 2020 pandemic, uh, consultants like Goldman Sachs, they have predicted that uh, economy will go through a great depression kind of situation. So that means market will not recover quickly, but market bounced back quickly. But media was publishing these kind of negative news. So we have to avoid these kind of negative news. If we follow the negative news, if we follow the group, then we have to sit on cash. If we could have sat on cash, we could have missed a huge recovery that followed in 2020 May, June, July, August, right? It was a huge recovery that like started. People could have missed that in 2020. So during bear market, there will be herd behavior of extreme panic, and people will rush to protect their downside risk. But however, stay away from the herd behavior. Stay away from anything that triggers fear, right? Not necessary to rush to protect your downside during your market fall. So this fact is actually supported by like data. From 1991 to 2020, there are 2022 April, 1991 to 2022 April, there are close to 22 market correction. Out of that, there are only 4 market corrections that has become bear market. So the probability of a correction becoming a bear market is less. A correction like is basically short-lived. That means the market recovers quickly. This data I'm providing here to make sure that nothing to worry about market correction. Market correction will bounce back quickly. So as an investor, you have to stay invested. There is no necessity for you to push the panic button. That is my point here. Right? Those 4 major crises are like huge economic events, like Harshit Mehta scam in 1992 and US technology bubble burst Y2K issue in 2000 and 2001, and 2008 global financial crisis, Lehman Brothers fall, right? 2020 pandemic, COVID outbreak. So these are the major reasons why bear market is set in. So out of the 22 market corrections, which was more than 10% since 1991, only 4 of them became bear markets. So it means like more than 20% fall has happened only 4 times during the last 22 years. And there is one more insight which I want to give you. From 1991 to 2022, in the entire 31 years journey, not 22 years, I'm sorry, it is 31 years journey. Among the total stock market working days, 53% working days market went up. More than 53% of the times market went up. 46% of the time market went down. That means on record, it is close to 50% or more than 50% of the times market stayed on green, market was positive, market went up. So that means like during market correction or bear market, no need to worry about market fall, correction, losses. Please remember market will definitely recover because 53% plus probability is there for market to recover. So the possibility for recovery is definitely there. In the year 2000, Sensex was at 6,000 levels. Subsequent to the Y2K problem and technology bubble burst, market corrected by more than 50%. But again, market recovered. Then in the year 2008, market touched close to 20,000 levels. Then subsequently, market dropped to 10,000 levels. From there again, like it touched 40,000 levels in 2020. Subsequently, market crashed to 26,000 levels during like COVID pandemic. Then again, it touched 60,000 levels now. Now, like if you look at the history of like these ups and downs, one thing is sure, like market falls, corrections happens. Equivalently, market recovery also happens. Right. So one thing what we have to remember is like for every fall, every correction, every crash, every bear market, there is a recovery, there is a boom period, there is also a bull run that can happen. So instead of worrying about bear market that has happened or a correction that has happened or a crash or fall that has happened, what you need to do so that you can create better wealth when there is a bull run, like that will be the next phase, right? So what you have to do now to take advantage of this particular correction, what you have to do to take advantage of this particular market fall? Very simple. You have to practice discipline and stay invested. During market crash, market correction, bear market, one important behavior we have observed is people immediately terminate their SIP, right? This is a reaction that should not be allowed. This is a reaction. You are getting like scared of the situation and you are stopping your SIP. What is the investor's mindset? Okay, I have invested last month like 10,000 rupees in the SIP. Now it has become 9,500, right? So if I invest this month again, it will become another 500 rupees loss. So why should I invest and lose my money every month? Instead of that, the right perspective is last month I have invested, I have got 25 units. If I invest now, because the market has fallen down, I may be getting 30 units for the same 10,000 rupees. I will be getting more number of units. During the market fall, market correction, you are able to accumulate more number of units for the same amount of investment, or you are able to buy units at a discounted rate. Market is available on a sale to you, but when there is a sale on the like shopping mall, we rush. But when there is a when there is a like a huge sale, share prices are available at a discounted rate, then it's peak, then like we will rush to exit from the stock market. So this reaction we have to stop. We have to respond in such a way to continue our SIP. If possible, we can increase our SIP during the market fall. If possible, you can make a lump sum investment also in stocks and equity mutual funds. It's a good time because market is available at a discounted rate. Don't follow the crowd. Following crowd is definitely a setback during bear market. So act against the majority people of doing, or act against what headlines are telling you. Read between the lines and take appropriate decision. So one thing remember is like every fall has got a seed that will help its recovery. So every market fall, every correction has a seed for its recovery. So you have to stay invested. That is the only thumb rule that can help you create wealth in the stock market. So let us say a stock market is a long-term wealth creating mission, right? Why I say it's a long-term wealth creation mission? An economic cycle or market cycle is basically for 7 years time frame. During this 7 years time frame, stock market will go through different phases, predominantly 5 phases. A phase of negative return, a phase of no return, low return, then uh, average return, above average return. These 5 phases will be there in any economic cycle or market cycle, right? So in which order this particular, all these phases are going to come, we don't know. It can come in any order. Also, if one particular phase is going to come at a stretch or it's going to come in bits and pieces, we don't know. It can come at a stretch, it can come in bits and pieces also. All right. So we are not sure, like like when to enter, when to come out, or during when the market is correcting, let me come out. When the market bottoms out, reinvest. It is not a workable, proven, tested way to invest or make money. Many a times people lose opportunities when they do these kind of timing or market calls or trading activities, speculative activities. When they do it, instead of that, you invest and stay invested for the entire 7 year time frame. If possible, do an SIP. If it is additionally possible, when there is a dip in the market, invest more money into it. So patience and discipline, staying invested are very much important to create long-term wealth. Yeah, I told you have to stay the course, but to stay the course, you should have conviction, right? So how can you develop that conviction to stick to the investment portfolio even during market correction? First thing, what you have to do is you have to list down the goals you have got, financial goals, and what is the time you have to achieve those goals. If you have got only long-term goals, then invest close to 70% of your money in equity as far as that particular goal is considered. Even if you are an aggressive investor, even if it is a long-term goal, don't invest more than 70% of that goal specific money. Then even that 70%, like you have to diversify based on your risk tolerance and timeline you have got. When there is a market correction, you have to use it as an opportunity to rebalance. I told you, right? Even for your long-term goals, you should have only 70% as a maximum, even if you are an aggressive investor in equity. Right? So you have got 70% in equity and 30% in fixed income, let us say. Now the market has corrected by 30%. Because of that, if you look at the ratio now, it will not be 70-30, it may be 60-40. Now you have to rebalance, withdraw some money from fixed income and put it in equity to make it 70-30. When you are doing this, you are buying low. You are buying more number of shares and or more number of mutual fund units for less investment. This will help your portfolio recover faster. When the market recovers, your portfolio will recover faster because you have rebalanced, averaged out, you have bought low during the market correction. So rebalancing can be considered during market correction. Rebalancing is one of the important response you have to do during market correction. If you have a goal which is basically short term, you should not invest your money in equity funds. However, if you have got a long-term goal like 10 years, then you can invest, as I told you, close to 70% of the money can be invested in equity. However, this long-term goal of 10 years is becoming a short-term goal after 7 years. Now, like 7 years is over, you are just left with 3 years. By now, like you have to start converting your equity portfolio. So far, you have accumulated in the last 7 years. You convert slowly to fixed income schemes. Why? Because when you are closer to your goal, let us say 9 months, or say 9 years, and 9 months is over, you are left with only 3 months. During that time, market falls by 30%. Then you will be in a disadvantaged position to meet that goal. You will not be able to meet that goal. Instead of that, before 3 years itself, you safeguard your money and move it to fixed income schemes. So if the market corrects during that phase, you are not worried because that particular money, which is specific to that goal, short-term goal, you have moved to fixed income. Market correction or fall is not going to impact that. So that way, what I would strongly suggest is do this, like goal-based review with your financial planner. You do frequently, so that any goal which is becoming a short-term goal now, he will move that money and safeguard it in fixed income schemes. Rest of the money, like which like you have invested for long term, still you can hold it in equity funds. So even if market corrects, you will have time to recover it, right? Mostly bear market slump is short-lived compared to bull market rally. So it is a good news for you. Bear market will be short-lived compared to bull market. So you can wait for the recovery with a lot more confidence. So your waiting will not be for a much longer time frame. And based on your goals, decide only your long-term money invest in equities, short-term money don't invest in equity. Even during market correction with a 10%, 20% or bear market like 30-40%, don't press the panic button, right? When you are pressing the panic button, you are triggering your emotions. When you trigger your emotions, there's a high probability you may end up taking a lot of unwanted, wrong financial and investment decision for which you may have to regret later. So you have to act rationally. So at this point in time, when you are restless, to make you calm and composed, maybe you can have a counseling session with your financial planner. He will be able to give you much more comfort. So you have to stay the course even during market correction, market fall. Remember, even there's a market correction will like pass. This is basically a temporary moment. Even this moment will pass. Have that mindset. Take advantage of the market correction by continuing your SIP, increasing your SIP, making lump sum investments during market fall. Hope this video clarified about market correction, how you have to respond instead of reacting to it. So if you have any additional questions with reference to market correction or wealth creation or achieving your financial goals, I strongly suggest you to book a free complimentary appointment with our certified financial planners. To book a free appointment, a link is given below this video in the description box. We regularly organize insightful investment webinars. We invite very good investment experts and ask them to present it. At the end of the presentation, whatever the questions you have in mind, you can directly ask the investment expert. They will give a specific reply to your question. So this webinar is completely complimentary. Again, if you want to attend our webinar, there is one more link in the description. You can click the link and leave your name and email ID. We will send you invite for the upcoming webinar. Hope you like this video. I'll again meet you in another useful video. Bye.